What's up, everybody? Welcome to In the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. Right now, the stock market on this day, that is Wednesday, it's Man Meal Wednesday, by the way, in case you were wondering. Man Meal Wednesday, the stock market has been really crazy. Started off green, everything sold off, took a big giant dip because, hey, it's QT day. We'll get into that. And then it started to actually turn green. The Russell 2000 just teetered around green. We're about 15 minutes away from the close. We might actually see a green close to start out June. We actually saw some green for May. We're going to get into what I think might be in store for June as well. But we have the S&P that is at 0.2% down in the red, so only about 8 points. The Dow is only down 37. NASDAQ's down 29. Russell 2000 is down a whole 72 cents. That's 72 cents, guys. That is right. Crude oil is still way up there. They're at $115 a barrel. Still humming. And we'll see what the day brings. We also have earnings today, guys. We got GameStop, HP, and a bunch of other ones as well. Chewy in there too. So make sure you guys are sticking around. And of course, at the end of the show, we'll be covering the over-unders. So make sure that you're putting over-under and your favorite ticker in the chat. I'll skim through and find my favorite stocks that I'll look, or not my favorite stocks, but just ones that stand out to me, of course. And I'll determine whether or not I think that your favorite stock is overvalued or undervalued. So make sure you're putting that in the chat as well. Guys, what a crazy day, right? Before we get into anything, hey, Johnny Depp won. Johnny Depp was awarded $15 million less, $2 million because there was some sort of, I guess, charge that they were in favor for Amber Heard on. But, yeah, by and large, the guy won. So if you guys were team Johnny Depp, which it seems like most people were, I was team Johnny Depp, team Depp, whatever you want to call it. And so I'm pretty happy about it. Seemed like Amber Heard was quite the crazy bitch. So there's that news. Also, there's some other news here. We have headlines as well. Elon Musk came out. Well, he didn't come out. There was a leaked email, guys. There's a leaked email out there with Elon Musk in reference to coming back to the workplace. He is not for remote work. So he sent an email to employees demanding that they work a minimum of 40 hours per week in the office, according to reports from Reuters and the New York Times. He said, quote, in the email, "If you don't show up, we will assume you have resigned." This is to the executives. And the email reports also cites 2 anonymous sources verifying the authenticity. So it's not just one person leaking this out. Elon actually replied to this, had a reply in there, and basically was like, what his thoughts were. And there was a tweet out there that asked, "Hey, Elon, a lot of people are talking about this leaked email. Any additional comment to people who think coming to work is an antiquated concept," basically meaning obsolete. And he said that they should pretend to work somewhere else. And I definitely want to get your guys' thoughts on this. I'm already seeing some people chime in here. Christopher Topher agrees with Musk. Yeah, give me your thoughts on that. Before we get into anything, though, of course, I almost missed it. Almost forgot it. We got Philip Stroh, Ralph Vandenhoek, Savvy Money Show, Prabhu A, and Tiger's Edge. You guys are our starting 5. If you missed the starting 5, guys, it's probably because you're not subscribed or hitting the notification bell. I always shout out the first 5 people that show up into the stream. So if you want your name to show up, you got to hit subscribe. You got to hit that notification bell. Listen, I'm trying to get to 100,000 subscribers. Maybe by the end of the year. We'll see. I could blow up. I got to show my mom that I'm a legit YouTuber. I've been doing this thing for 5 years, folks. Somebody hit that subscribe button already. But anyways, we got a lot to discuss. Jeff Panika said, agreed to cut back remote, less productivity. It's very interesting. There's 2 sides to this coin, right? Because you have people that make claims that working remotely, it makes for happier employees. They work more efficiently, and you don't have to worry about commuting. That takes up less of your time. You have more time to spend with family, and you have that work-life balance that you're working with. And so there's that side of the argument, right? But there is the people like Jeff Panika here talks about that there's less productivity. And I think maybe it depends on the job. Does it depend on what you're actually doing? Because you have CEO of Airbnb, right? Everybody can work remote. We've proven that we're just as efficient and even more efficient working from home. And so made it available to everybody. Still have their offices should you want to come in. And I think there's probably stipulations on that. I'm sure they have to come in for conferences or what have you. But we heard over the pandemic, right? Facebook, 50% of their employees will be remote work. There's arguments that you can make to this. I mean, what if you find talent in India, right? If you're a software company and you find talent that's in India or Turkey or wherever, right? The EU, and they can't come here to work, but they can work remotely for you and they can do a hell of a job for you, remote working. I think that there's definitely that side of the argument that you can make, but I think there's also something to be said for making those personal connections. You can't, it's really difficult to have a good personal relationship with somebody when they're not in the same room, when you're not able to read all of their body language and kind of understand and we'll just communicate well, right? I mean, you can communicate to a certain extent through a Zoom or what have you, and still get the job done, right? But there's morale and there's that connection with people that you just can't make unless you're in a room with them. And so I think that there's certainly something to be said there as well. And it seems as if perhaps Elon Musk has fallen on that side of the argument. Exception is sales, says Jeff Ponica. Productivity is on performance. Yeah, for sure. Mike Hudson says, I work better at home. I think that giving people the option is probably the best way to go about doing it, right? The hybrid approach. If you want to come in, cool. If you can still get your job done and you're working at home, if me personally, I wouldn't give a shit. If you got done exactly what I asked you to do and you either were here or you weren't, cool. But again, I think that there is that love, that certain connection, that the connection part that certainly makes a valid argument, right? A couple of other comments here. I can agree with it. Remote, happier employees are more willing to work better. I also believe that depends on the job and department. See, that's the camp that I'm in. You know, obviously, this doesn't account for people who are working for their hands. You can't fix an HVAC system remotely. You just can't. But maybe supervisors or dispatchers of, trades, what have you, could do that. So I think that there is a certain part that certain instances and where it makes sense and certain ones where it doesn't. And you just have to find what works best for you, I guess. And I think that's probably what we're going to see. The way that we used to work before the pandemic, I still believe that those days are gone. But I do think that some of that comes back, and we're starting to see that too. Goldman Sachs talked about this. Some other Google, right? Google. It's not all tech companies are like Google talked about bringing people back into the workplace. So I do think that there is some validity to being in the workplace and then also being able to work remotely. So anyhow, that's a great point. Alex John says Tesla's growing 50% per year. They don't have time for work. They just they have so much demand for their products and employment that they can't risk losing some people, or that they can risk losing some people. Yeah, I would agree with that. Jeff Chow, what's up, Jeff Chow? What's up, my man? Good to hear from you. Says I work better at home. In the office, I get too bored editing. Yeah, there's something to be said for that. So I actually I'm exactly where you're at, Jeff. So I like to work from home, but I also feel like I'm more productive when I'm not home. There's something to be said, I think, for being in the place, living in the place that you work. And for some people, it's cool, but like me, I got to be out. I got to be out somewhere else besides the same four walls that I've been staring at all day long or all week long. Like being able to get out is what, it would drive me crazy. It would drive me crazy. there's certainly that freedom of working from home. So yeah, I think this is going to be a debate that continues to go on, but love the interaction, love the engagement you guys are bringing today. I wasn't expecting that kind of a response, but yeah, good stuff there. Another comment that was made today was from Jamie Dimon. If you guys didn't catch this, Jamie Dimon now calling the economy a hurricane rather than a storm that we could be going into, revolving around potential recession if the Fed doesn't do something. This is very interesting. I mean, this is coming from a guy who said that Bitcoin was worthless back in 2017 and that it was a fraud, that it was no value to it whatsoever. And then JP Morgan, and he's actually said this recently too, that there is no intrinsic value to Bitcoin. But JP Morgan has that allocated to their portfolio. They have assets under management in Bitcoin and cryptocurrencies, which is kind of crazy to me. But talked about this, and here's the other thing too about Jamie Dimon. He talked about, so if you guys don't know who Jamie Dimon is, the CEO of JP Morgan, widely regarded, widely respected in the investor world. But the thing of it is, and it cracks me up. I'll call anybody out. I've called Warren Buffett out on this channel. I've called out Kathy Wood in certain instances. If there's something that I disagree with or something that contradicts things that they say, I'm going to talk about it and then obviously get your guys' thoughts on this too. So basically talking about how the Fed needs to do more work. Otherwise, we're going to see a recession and that it's going to get very ugly in the economy. It may very well be the case. Look, there's a lot of headwinds, right? I mean, we have war, we have inflation, supply chain problems that we're not even remotely done with. Energy prices are going to continue to go through the roof. And I strongly believe that if you rely on natural gas to heat your home, I got news for you. You better start saving now because it's going to be expensive AF come the wintertime. It's not getting any better. So those are headwinds for sure that could incite a recession. But with Jamie Dimon, he talked, back in 2018, they were predicting 3% to 4% interest rate hikes, or all the way up to 3 to 4% interest rate hikes from the Fed. We didn't even get close to that. They didn't even sniff it. Got the 2.25. The entire market corrected, if you guys recall, back in 2018. And look, I'm not saying that the guy's right. It has to be right all the time. It's just like I think we're getting a little bit ahead of ourselves. The market's priced in a lot. I mean, if you're in anything in the NASDAQ right now and you're down 70%, consider yourself lucky. I mean, that's just how it's been in the NASDAQ right now. The S&P corrected 20% officially from its highs back in May. The Dow Jones was down 8 weeks in a row, worst stretch in 99 years. Finally ended up having a green week last week. But I mean, there's a lot that's priced in, and we've talked about that a lot. I think that we're getting a little bit too ahead of ourselves as far as that's concerned. Yeah, that too. Mike Hudson says he's just mad that he didn't get a pay raise, so he's throwing a tantrum. For sure. Absolutely. All right. So anyways, those are your headlines. We also have earnings today, guys. Not too many to talk about, but there is one big one, that's for sure. At least it used to be, and that is GameStop. GameStop right now is at $119.91. It's about where it's going to close for the day. Let's take a look at that chart. I'll bring it up for you guys, and we can react to those earnings as they come in, just to kind of give you a snapshot of what the expectations are for GameStop today. This quarter, we're expecting a loss of $1.45. Estimated revenues expected to be coming in at around $1.32 billion. Last time around, they came in and beat earnings. Or no, sorry, they missed on earnings as well. Actual revenue came in at 2.25. They beat on revenue, but earnings per share got absolutely crushed. Obviously, the Wall Street Bets crowd is in this and kind of, I think, probably keeping this afloat, I would imagine. They've missed 8 of the last 11 quarterly reports. So they missed a lot. So expectations here, I would imagine, are pretty low, considering that the estimated earnings per share is at $1.45. And again, $1.32 billion in revenue. If they can't beat that number, I don't know what they're going to do. If you guys recall, let's go back out to the monthly chart here, just to kind of show you what happened with, oh my God, this is crazy. So if you guys recall last January, if you weren't a part of this movement, GameStop short squeeze all the way from like around $5 to $483 in a matter of 6 months. Actually, it was $2.57 at the low of April of 2020, then shot all the way up to $483. That was the high there. That's your monthly chart. Let's go back to the 5-minute just to see how it closed. Closed down on the day 4%. On May 16th, 2021, GameStop announced that it's working on a non-fungible token, or NFT, platform, creating a token that is based on blockchain Ethereum technology, but is building an NFT platform as part of an ambitious plan to transform itself into the Amazon of gaming to work, or gaming or going to work. So to me, this is obviously them trying to pivot, because going in and buying games at the store is no longer going to be a thing, at least for the broader market. If you want a game, I can't tell you the last time I walked into anywhere to buy an Xbox game. I play Xbox, I play Madden, I play Call of Duty, a couple other things. I've downloaded them all. And so GameStop's going to have to pivot. And I think that this is what they're trying to pivot to. As of March 2022, they currently are in $44.6 million in debt. Not too terrible considering that's the first of the year. They had $1.27 billion cash on hand. So that is actually not too shabby for a company that may be looking to pivot. We'll see. I'm not optimistic on it, but listen, the bar set pretty low. The bar set pretty low. Next, we have Chewy. If you guys aren't familiar with Chewy, it's kind of like Amazon. It's an e-commerce platform for pets. Still a very small company. This company went public, I believe, in it was like late 2019, 2020. I could look this up, but I'm just trying to do it quickly. 2019. I thought I was right. 2019. So stock hasn't been doing all that great. Had a pretty decent run during the pandemic for obvious reasons, as most of the e-commerce platforms did. But the expectations here for Chewy are that we're going to see a loss of 13 cents, $2.42 billion in revenue. The real struggle here, I think, could be the recurring theme that we've seen with a lot of the other e-commerce platforms like Amazon and Etsy and Shopify, that inflation has really hit these companies very hard, especially on the shipping side. It's been so expensive to ship things. I already had it on here. July 31st, 2021, Chewy had a market cap of $34.7 billion and a forward PE of 833 times the following year's earnings. It's now at $10.4 billion market cap with a forward PE of still 153 times next year's earnings. I guess it's still expensive, huh? March 2021, Chewy reported revenue of $2.04 billion for Q4 2020 and net sales of $7.15 billion for the fiscal year. This quarter, they're expected to bring in $2.42 billion. So that's your expectations. Pretty crazy to see how far this has come down, and to think that this is still pretty highly valued. I don't know. I don't know what to feel about this one. I would say that I actually almost feel better about GameStop than I would about Chewy at this point, just because there's a lot of risk involved. Hey, listen, I'm not saying that GameStop is something that, you should really just dump all your money into. But I think if I had to choose between Chewy and GameStop today, probably would actually go with GameStop. I'm not going to lie, just because that bar has been set so low for the company on expectations that it's almost like they don't even have to jump over it. They just have to step over it at this point. So that's your expectations there. A couple other smaller ones. C3.ai, if you guys are familiar with this one, I would say it's probably closely comparable to something like a Palantir. That's kind of maybe the same type of vein as far as that's concerned. The artificial intelligence software company whose target customers are large enterprises. Palantir was more focused on government. They're working into commercial, the commercial side of things. Obviously, we've talked about that a lot. In 2020, C3.ai was one of the hottest tech IPOs, originally IPOing for $42. Went all the way up to $140 over the next several days, and now we're looking at it right now at $18.52. That's where it closed at today. The expectations on this one are a loss of 29 cents. $71.28 million in revenue is also the expectation there. So we'll see what happens with that one. This one you might not have heard of. PVH. So PVH, probably like a ticker or PVH Corporation, a company that you've not heard of, but it's a retail company. These names you have heard of: Tommy Hilfiger, Calvin Klein, Heritage Brands, Van Heusen, Izod, Aero, a bunch of other ones. That's what's made up of PVH Corporation. So the retail space, we saw Gap really shit the bed, but then we also saw Nordstrom do pretty well. It's been a real coin flip on retail sales and how well they've done. So can PVH come through here and actually do well? Remains to be seen. Obviously, the expectation here is that $1.61 per share, $2.09 billion in revenue is also expected for them. They have been witnessing momentum in the digital business as customers shifted online purchases. There's a lot of uncertainty revolved around here, though, because of the war in Ukraine and other macroeconomic challenges, of course, with supply chain issues, obviously impacted by everything. Transportation shortages, the labor issue, especially increasing wages, is also weighing on them. So there's a lot of headwinds for a company like PVH, and we've seen that theme really kind of relay in some of the other ones. Could it move like a Gap to the downside, or can it move like Nordstrom to the upside? We'll have to wait and see when those earnings get released. But let's go ahead and check back in with GameStop, see if there's any movement on that one. Not really. Stock's trading down around 0.5%. Again, it closed the day down 4%. Check back in with Chewy. That stock is zooming. Boy, did I miss this one. If you guys bought Chewy today, look at this. Look at this. So Chewy just started to move now. It's up 15%. Let me pull up those numbers to see if I can find them for you real quick. So let's see. Chewy came in. Let me see. Net sales 2.43 billion. The estimate, like I mentioned, was 2.41. So it looks like they came in and beat on revenue. See if I can bring some of those other numbers in. Stock is continuing to run up here. It's now up 16%. Looking for that earnings per share. The looks like they definitely beat on revenue. Giving it a refresh, see if I can find the actual number here. But don't have that just yet. The stock is, so it looks like they beat by 16 cents. I'm going to reiterate that. Net sales came in at 2.43 billion. The estimate was 2.41. Running a couple of other numbers here I'm just kind of reading through the report. Gross margin of 27.5% declined 10 basis points over the year. So that's not good. Yet the stock's still rolling here. Something's got this thing moving. Maybe it's a big ass buyback or something. Net sales of 2.43 billion, as I'd mentioned before. That's up 13.5% from the year over year quarter. Net income of 18.5 million, including share-based compensation expenses of 27.2. Fiscal year 2022 is off to a good start, according to them. They drove a solid 14% top line growth and delivered sequential improvements in gross margin and profitability. And our first quarter results are a testament to the resiliency of the pet category and clearly demonstrate our ability to execute against our strategic priorities. So goddamn, it's still going. Something else happening here. This isn't just on good earnings. Stock's now up 20%. As soon as I find it, guys, and you can go ahead and put it in the chat if you find something, but I don't have anything at the moment as to why this is moving so much. Is this really just off of topping sales? I mean, good God, this is wild. Stock just hit $29.80 after hours. Yulin says that's bananas. Yes, it is. Yes, it is. Christopher, good point. Maybe shorts covering. I'm not quite sure how much of that goes on in the after hours, but stock's still going up here. It's now up 24% just about. On sales beat. Looks to be what's happening here. Unbelievable. This is craziness, guys. Stock's still climbing, now up 24%. Closed the day at 23.61. Boy, I was way off on this. I'm blown away. I'm blown away. I told you guys that I probably would go after GameStop over Chewy. And we haven't looked at GameStop yet, but this stock is going nuts though right now. Jesus. Still rolling here after hours and still getting pushed up. It could be some short covering. There's a lot of people speculating that. That is, so those are your God damn. Put it in the chat. How many people actually made money on Chewy today? Who bought Chewy before the earnings? Tuan Lee says, I bought $1,000 worth of Chewy today. Well, you just made $260 so far on that. If this holds, now $270. Holy shit. Savvy Money Show said people saying it needs to go to 50% to break even must be shorts. Yeah, no kidding. Alex said I made 1K on Chewy. Man, there's a lot of people trading Chewy today. Zero Block says whoever's got calls, congrats. Hell yeah. Buy me a steak while you're at it. Now up 27% after hours. This is wild shit right now. Look at that. A couple other numbers I can read to you here from Chewy's earnings. Adjusted EBITDA of $60.5 million, which is a decline of 21.8% year over year. So this is the other thing that just, why is this going up? Adjusted EBITDA margin of 2.5% declined 110 basis points year over year. So also not good. I'm just kind of blown away at the way this is moving. I mean, they top sales estimate, sure, but what the actual F? It's up 26%. And we'll get to some other ones. I just wanted to see if I could find anything else before I moved on. We can always return to this. But what a move on Chewy. My goodness. Yeah, they beat earnings per share by 17 cents. So the estimated earnings per share for Chewy, if you guys recall, was a loss of 13 cents. So it looks like they actually came in profitable. It looks like they may have come in plus 4 cents per share for the quarter. Maybe that's why the stock's rolling, because they were expected to come in at a loss and they did not. That's what it is. They came in and beat earnings. They came in at 4 cents compared to the loss of what was that? What did I say? Loss of 13 was what I was expecting. So huge move on this. Stock's now up 25%, giving back some of those gains. But my God, congrats to those of you who were in Chewy. This is absolutely crazy. Absolutely crazy. All right, checking in with GameStop, see if there's any movement on that. That stock's starting to move now. It's up 5%. So even if I would have chosen GameStop over Chewy today, I think that perhaps I'd still be happy with that. So let's take a look, see if GameStop's earnings are out. That stock is now up 5%. It was down on the day 4%. So obviously a ways to go to kind of give back any of the losses that it's seen this year, because it's been brutal. But let's see if there's any earnings that have come out on those just yet. Looks like they actually topped revenue estimates. They came in at 1.38 billion versus the 1.35 that was expected. A loss of $2.08 versus a loss of $1.37 expected. And the stock's now up 7% after hours. That loss is awful. But goddamn if it ain't going up. Let's see if I can give you some more numbers on GameStop. The stock is rolling. As we know, this stock never makes sense. The moves on this never, ever make sense. But it's now up 10%. Holy shit balls. Who bought GameStop today? We'll get to some of the other ones, guys. I'll certainly get to those. I'm just reacting to this one. Oh, my God. GameStop's up. It's still going. GameStop shot up 10% after missing earnings horribly, although they did beat revenue estimates. This is absolutely insane. Quarterly loss, again, a loss of $2.08. The expectation was a loss of $1.16. Ooh, goddamn. Sometimes that upper gas just comes and sneaks up on you. Sorry for that in your ear. But it's hardware and accessories 673.8 million, which is down 4.2% year over year. Software 483.7 million, up 21% over the year over year, and collectibles $220.9 million. That's up 25.9% year over year. Those are some pretty okay numbers, but the loss per share, I mean, holy shit. The company reported net loss of $157.9 million, or as I'd mentioned, $2.08 per share. This compared to a loss of $66.8 million or $1 per share in the same period of last year. The adjusted gross, so again, far worse from last year. The adjusted loss was $2.08 per share at 1.38 billion. The first net quarterly sales were up 8% from the year ago period. So maybe that's why it's moving up, but you can see that it's giving back some of those gains. The stock was up around 10% on that reaction and now starting to move down. We'll see how this shakes out. Obviously still early here, but so far so good. Chewy absolutely ripping face. If you guys are just tuning in, want to know about Chewy, the stock climbed up as high as 27% on sales beat, and it's still holding its gains here pretty good. It's up 22%. Let's check out some of the other ones. Let's look on AI. C3.ai is now down 20%. That's not good. Closed the day down around 2%. It's at 1855. Hard to believe this stock was 140 some dollars a share at one point, and now down to 1485 here. And after hours is good for 20% down in the red. Let's take a look at C3.ai if you guys are interested in this one. Ooh, lots of interesting reactions here on Twitter, guys. It is getting absolutely wrecked. So give you some numbers here. Revenue total for the first quarter was 72.3 million. An increase of 38% compared to 52.3 million 1 year ago. Subscription revenue for the quarter was 56.3 million, an increase of 31%. Gross profit for the quarter was 55 million, representing a 76% gross margin compared to 40.6 million, increase of 35% 1 year ago. So all the growth looks relatively decent. It looks as if maybe they came in just below expectations on this. Let's take a look at what the expectations were. A loss of 29 cents, $71.28 million in revenue was the expectation. So I believe, let me go back and double check that is a miss on revenue. No, it's a beat on revenue. So they beat on revenue slightly. I wonder if this has to do with guidance. The stock's still getting plummeted. It's down 22% and getting absolutely wrecked right now. Absolutely wrecked. Jesus. Hope you guys aren't in C3.ai. It's getting trashed right now. Dumpster sale. They reported a loss of 21 cents. So they actually beat earnings. The consensus was a loss of 29. And even the whisper was at a loss of 24. So they came in a loss of 21. So they beat earnings expectations, and it looks like they also beat revenue. It's got to be the guidance numbers as to why this is down. I have to believe that. If we come up with some other stuff, I'm sure I'll share that with you as it comes in. But man, unbelievable. That is crazy. They beat earnings, beat on revenue, and then got absolutely wrecked. Okay, so let's check back in with Chewy, see where that's at. They actually beat on sales, didn't do well on earnings per share, but the stock's up 20% still. I mean, what a move on that. GameStop giving back some of its gains. It was up as much as 10%. They actually beat revenue, but missed horribly on earnings by a lot. $2.08 was the loss. 100% difference from last year. This time last year, unbelievable. So the company's still bleeding money right now, but people still want to buy it up. They can do that if they want. So let's take a look at a couple other things. PVH, as I had mentioned, also on the docket today for earnings. Let's take a look at that. And that stock is moving up 7% after hours. Remember, the estimated earnings per share was $1.61, $2.09 billion in revenue. I mentioned at the top of the show that there was a lot of headwinds for this. If you guys are just tuning in, I see 234 of you guys hanging out in the stream. If you guys are new, make sure you're hitting that subscribe button because I react to earnings every single day of the week. Make sure that you are subscribed and hit that notification bell to get notified when I react to tomorrow's earnings. We got a lot of good ones. We got CrowdStrike and so many others that we're going to be covering. But right now, PVH is a company that is a parent to Tommy Hilfiger, a bunch of other brand names that just escaped me. Yes, Calvin Klein, Van Heusen, Izod, Aero, a couple of other ones. So they have a lot of brands under their name that you now have heard of, even if you haven't heard of PVH. But that stock is moving right now. It's up 7%. Let me see if I can find those numbers for you real quick on what the actual numbers are. It's got to be good, I would imagine. Let's see what I can find here. They reported earnings of $1.94. The consensus, again, was $1.58, thereabouts. The expectation, I guess the earnings whisper, so to speak, was $1.65. So they beat on earnings pretty handily. I had my estimates around $1.61. So, whatever. They beat it. They crushed it. $1.94 was the estimated earnings, was the actual earnings per share. They also beat on sales, $2.12 billion compared to the 2.09 that was estimated. So really solid beat on that. I would imagine the stock probably ends up going higher at the open tomorrow. So keep an eye on this one. PVH, stock you might not have heard of. It's trading at 7 times next year's earnings, and they just crushed earnings, guys. They just crushed the current quarter. So might be one of those under the radar ones that nobody really talks about, but the stock's doing pretty darn good. The company's doing really well. Yeah, Snookeroo. I never heard of PVH, but you've heard of the brands. Pretty good stuff. They can do that if they want. I say things that I don't think are funny and people think are funny. So I appreciate that, Jose. All right. Couple other ones that are reporting today as far as earnings are concerned. Let me see if I can cover those for you guys as well. Sentinel, I think I saw somebody talking about this one, that it was making a move. As I'm going through, guys, we're getting closer to the end of the list here as far as earnings are concerned. Of course, I'll go back and recap it, but let's not forget, we have the over-under segment for the end of the show. If you guys would like me to react to your favorite stock as to whether or not I think it's overvalued or undervalued, make sure you're putting it in the chat as over-under and your favorite ticker, and I can go through and find it. And your favorite ticker, your favorite stock just might show up on today's show. So make sure you're doing that. But we're getting to Sentinel One. The expectations here for them was a loss of 24 cents. $74.66 million was revenue expectations. And a couple of things here. Global endpoint security market size was $12.93 billion in 2020. It's expected to grow to another $19.28 billion by 2025. On June 30th, 2021, Sentinel One completed an initial public offering. That's when they went public. So a couple of tidbits information for that. So cybersecurity space is where this lives. And let's see what the actual earnings per share were on this one. Let's see here. It's interesting. The stock was up 3.5% today. And let's see, this was at a high of $78 back in November. Still operating for a loss. We don't quite have that PE there for you, but it looks like it's still could be relatively cheap, especially in the cybersecurity space. Let's go back to the 5-minute chart. Looks like it's spiked up initially to $27.98 and now has fallen back down and gone into the red. It's now down 2.5%. Let's take a look and see what might be going on with Sentinel One. This is according to Seeking Alpha. The Q1 results demonstrate the combination of a robust demand environment. No kidding. We know that. Total revenue increased 109% to $78.3 million. And the expectation there was 74. So they beat on revenue. They beat on revenue there. And so that was a pretty decent number. Total customer accounts grew over 55% to over 7,450 customers. Still very small. I mean, that's really tiny. I would imagine competition's got to be really tough on them. But the growth is there. I mean, 100% increase in revenue year over year is pretty damn good. 109% increase in revenue year over year. These numbers are looking pretty strong, even though they're a small company. GAAP gross margin was 65% compared to 51% a year ago. also a really solid number. Cash and cash equivalents, short-term investments were around $1.6 billion. Looking to see if I can find earnings per share, that number there. But this looks like the sell-off seems a bit kind of like BS. These numbers are pretty darn good. They came in at a loss of 21 cents. The estimated earnings per share was at a loss of 24. So they beat on earnings. They beat on revenue. Those numbers were insane as far as growth is concerned. This might be a little sleeper too. If you guys haven't checked out Sentinel-1, that might be one that you might want to consider taking a look at because those earnings look like they're pretty darn good. Savvy Money Show says it's like AWS, but cheaper. Snookeroo even knows about Sentinel-1. I'm not really all that familiar with it, so I appreciate you guys bringing that to the table. So those are the ones. We have HP Enterprise. Remember, I was talking about this yesterday with HPQ. HP separated their company to the enterprise side and the computer side. The computer side yesterday crushed it. They did extremely well. It's looking like the enterprise side did not. It's down 7%. Estimated earnings per share were 45 cents. $6.78 billion was the estimated revenue there. And it looks like something went amiss. Let's take a look and see if there's any numbers I can give you guys on that. Which is actually kind of surprising. I would have thought the enterprise side would do really well. They missed by a penny. So they missed earnings per share by a penny. The estimate was 45 cents. It looks like they came in at 44. They also missed on revenue as a service. Orders increased 107%. So that's not a bad number at all. But it looks like they missed expectations regardless. They missed earnings. They missed revenue. That's why the stock's down 7%, in case you guys were interested in HPE. Ticker for Sentinel-1, Barry, is S. It's just S. There's your stock right there. It's just the letter S. There's a ticker. Okay. Mike Hudson shared this on Discord, says Philip Stroh. Yes, if you guys aren't familiar with Discord, our Discord group, I encourage you to check out the join button next to subscribe, or the link is also in the chat as well. If you guys want to check that out, would love to have you guys as a part of the Chaos crew. We have our Discord group that's in there. They hang out and chat every day. So, if you guys want to be a part of the Chaos crew, you can certainly hit that join button next to subscribe or go to the link in the description. On top of all that, I give a watch list as well each and every day, a list of 5 stocks with fundamental and technical breakdowns. Today, because it was the first of the month, I gave an asset allocation, what I think was actually going to be moving as far as the sectors in the market. So I give an ETF breakdown on 5 ETFs that I think are actually going to outperform the S&P that month. And so far, the record's been pretty darn good. For the month of May, I actually beat the S&P 500 with that allocation. So if you guys are curious about that, make sure that you're either clicking on that link or joining on that button next to subscribe. It just helps support the channel, and it really doesn't cost that much. I'm talking $5, $5 a month. I mean, that's a gallon of gas right now. You can afford it. MP. So, all right. So let's go ahead and get into our over/under segment, guys. Make sure you're putting over, under, and your favorite ticker, and I can determine whether or not, or I will determine whether or not I think that your favorite ticker is overvalued or undervalued. Let me recap some of the other stocks here and that we covered in the beginning of the show. GameStop came in. They beat on revenue, but missed earnings horribly. Came in at a loss of $2.08 per share. The expectation for that was much higher. Let's see what I'm going to just double check what the expectations were on earnings. So the loss of 2.8 was the actual. They were expecting $1.40, a loss of $1.45. So pretty big miss on that one, even though they ended up beating on revenue. The bar was set so low for them, and they couldn't even just walk over it. It was just unbelievable. Chewy, I think, is still the big winner for the day, the big wiener. They came in and didn't do too bad. They came in, I believe, and missed earnings slightly, but also crushed on sales. That came in much higher than expected. Stock climbed up to 27%, and then came in and is now sitting up 21% after hours. So that's one of the bigger winners. Another one that a lot of people weren't really paying a whole lot of attention to was PVH. They crushed it. They crushed it. So the stock's doing extremely well. Company's doing extremely well. The consumer is strong. If you're buying, must be a lot of people out there buying Tommy Hilfiger and Calvin Klein out there. Stock's doing really well here after hours. That's up 5.5%. And there was others as well. If you guys want to check those out, make sure you're just going back and watching through the stream. Yeah, I love this, Zero Blue Ox. If you want to be in the Chaos crew, it's the price of gas. Go the mile and join. I like that. I like that. So, okay. Let's see here. Give me the over-unders, guys. We don't have a whole lot. Is nobody putting over-unders? Are you guys not following the rules? Follow the rules, please. I see a lot of tickers in here, but none of them with over-under. If you'd like me to determine whether or not I think that your stock is overvalued or undervalued, make sure you're putting over-under in the ticker in the chat. But I don't see anything here just yet. I'm not going to go over it unless I see it. Over-under and your favorite ticker. Thank you. Thank you, Muhammad. Thanks for playing along, my man. Thanks for playing along. I appreciate the smiley face too. PayPal over under. So let's take a look at that. That stock has been absolutely murdered over the last 6 months. Murdered. $311, I believe, was the high on PayPal. Is that right? $311 a share. Whoops. 310.16 is where that was just in July of last year. So just over a year ago, this was at $310 a share. Hasn't even sniffed that since then. Is now trading at $82.48. Was it overvalued all the way up there? Potentially. Yeah. I mean, it got way ahead of itself. The multiple was ridiculous. I believe it was somewhere around 60 or 70 times next year's earnings. Now, though, it's trading at 21. It's trading at 21 times next year's earnings. It came down and touched that $71 area. And this is officially lower than what it was pre-pandemic. It's lower than what it was in 2019. And if you ask me, I think that PayPal is way more valuable now than when it was in 2019. Look at this. Just before the crash in the pandemic, it was trading at $124 a share, $124.50. That's where it was trading. It hasn't traded this low. Let's just go to the bottom. So 71.83. It hasn't touched 71.83 or even gotten close to that since May of 2018. PayPal's worth way more than this. It's undervalued. I think that the potential bottom could be for them at 71.83. I just don't see how this is all the way down here for too much longer. You had the 50-day moving average in which it hasn't traded above that since. I mean, we had a day that it got above the 50-day moving average back in April. That didn't last long, but it hasn't truly traded over the 50-day moving average in almost a year, since September of last year. So, I think that it's very undervalued. It may be tough. It may continue to be volatile for this stock in the near future. But if you have a long-term approach on this, I would say even 6 to 12 months out, the PayPal should be just fine. And I think that you'll actually be laughing at this stock and that you couldn't believe that you got it this cheap. That's my expectation on that. Here we go. Now we got people playing along. Thank you. Alex says over under on Neo. This is interesting. I used to hate Neo. I hated it when it was, $50 a share because I thought it was ridiculous, and it was. But it's come down to levels that I think are somewhat reasonable. It's still operating for a loss, so they're not profitable. It's gone through a lot, especially under the thumb of the Chinese government. All the Chinese stocks have done terribly bad. If you guys aren't familiar with Neo, first of all, you probably live under a rock. Second of all, it is a Chinese automaker, and I think that there's possibly reason to believe that Neo could actually be undervalued at this point. It's so crazy. I remember trading Neo when it was at $3 and then kicking myself when I sold it. I traded Neo when it was at $3, and this was like in 2019. I was trading Neo before anybody even really knew what the hell Neo was. I didn't trade it because I like the company. I just traded it because I liked the chart at the time. But looking at it now, it's at $17. China's coming back online. They're reopening. I think that there's a lot to like here at this price. I think that this is undervalued. I think it is. I think the appropriate value for Neo probably lives somewhere around $25 to $26 in the near term. So looking at a couple of other ones, MDB. Thank you, Tiger's Edge, for playing along. MDB over under. Not going to be able to get to all these guys, so if I didn't, then make sure you're coming back tomorrow, and I'll try to get to it. But I see a lot of you guys participating now, which I love. But looking at this one, MDB is, what is this one? Tech IT software services. It's a modern general purpose database platform. Listen, data centers are huge right now. The platform enables developers to build and modernize applications across a range of cases in the cloud. So highly competitive space. I don't know much else about the company. This is trading at a loss. It looks like $16.46 billion. I'd have to check out the free cash flow on this one, but it doesn't. I'd imagine it's probably not a lot, but I'm guessing that the growth is probably substantial. I must have looked at this before because I don't remember ever putting this support line down here, but it looks like I was right on that support. I'm going to go with undervalued. I don't know much else about the company fundamentally, but it looks as if it's come down enough. I mean, this is trading at $590 a share back in November of last year, so about 7-8 months ago. That's where it was trading at. Unbelievable that now it's been cut in half. So I think that there's certainly a case to be made that it's undervalued. I like the fact that it's starting to make the turn here. Whenever I decided to mark the support, or maybe it was last week, I don't know. I go through so many tickers. So this one probably looks like it's undervalued. Watch for the trend break here. This isn't a downtrend, obviously, in the long term, but even in the short term, this breaks up above here. So you can see that it's been in these lower highs. This starts to kind of break above here, maybe around 280. Could start to get interesting there. So keep an eye on that Tiger's Edge. I like that one. I just like the chart setup in particular. Ooh, Boogaloo Brown, our old pal Fastly, over under. Boogaloo Brown, one of the OGs. You remember when I covered Fastly when it went from $30 to $150? Man, what a call on that one. Now trading at $12. My God, has it been that long since I've looked at Fastly? It's at $12. Are you kidding me? Holy shit. Holy shit. Fastly's really down that low? My God. $136 is where it was at the highs back in October 2020. Then it came back and tried again here in 2021, January 2021, and has just been absolutely trounced. I mean, listen, they continue to miss on earnings. The slowdown has been really tough on them. I just got to believe, though, that now that we're below, I mean, we're almost at pandemic lows at this point. I have to say Fastly's undervalued. There's no way I can say it's overvalued. Yeah, the company's slowing in growth 100%. You can't dispute that. But is it really worth less than what it was at the bottom of the pandemic back in March of 2020? I don't think so. So I think that this actually is undervalued. It may continue to be volatile. I might be wrong on this, but man, the risk reward certainly seems good on that. Holy shit. That is crazy. Absolutely crazy. All right, Travis, I got you. LRCX. Let's take a look at this. LRCX Lam Research. Trading at 15, 16 times next year's earnings. If you guys aren't familiar with this one, is a supplier of wafer fabrication equipment and services to the semiconductor industry. The semiconductors have obviously been in really tough spots. This, to me, in this industry, in this space, it's undervalued. 16 times next year's earnings. I think that there's definitely some upside to this. It was trading at 731 times next year's earnings, or 730. I'm talking too fast. $731 a share was where it was trading at just in December of last year, and actually ended up retesting that again back in January of this year, and now come back down to lows of 442. I think that I like the support here around that area, maybe around 465 even. Trading closed the day at 505. Travis, it's undervalued. I think it's undervalued. Planet 13. I'm not touching that with a 10-foot pole, Will Thompson. All right, guys, that's going to do it for me. Thanks so much for tuning in. Again, tomorrow we have some really good earnings that we're going to be reacting to as well. All right, we have on deck, we have CrowdStrike, Restoration Hardware, Okta, Asana, Lululemon. I mean, come on. You know you want to come back here. Make sure you're hitting that subscribe button, hit that notification bell, and then also hit that like button on the way out the door. Don't forget to become part of the KS crew as well. The link is in the description. It's in the chat that you're chatting in right now. There's also a join button next to subscribe. It really just helps support the channel. It's $5 a month. You get a watch list from me every single morning. I give a really nice breakdown of fundamental and technical analysis on each one of those, and gives you a nice direction on where to go in the market for the day. If you guys want to be a part of that, I certainly would love for you to be part of the Chaos Crew and support the channel, support what we're doing here. And that's going to do it for me. Thanks so much for tuning in. I'll see you guys tomorrow. Bye.